Good afternoon, and welcome to our podcast of the Stoic Team. We're here in the second week of April discussing the role of credit repair in the mortgage pre-approval process and generally where it should be in your home buying process. We're here with Peter Georgitsis, a senior mortgage advisor at Preferred Rate, and we're excited to talk about this topic. Peter, I know a lot of people, one of the first discussions or one of the first questions that people usually bring up when we talk about pre-approvals specifically are fears or anxiety regarding their credit. To kind of dispel that, could you let us know specifically what's the minimum credit score that is possible to get a mortgage?
Good morning, Peter. So this was my concern. We're at the beginning of the spring market, and people have increased their credit card debt because after the pandemic, after some people who have received extra money from the federal government and weren't receiving it anymore, had struggles keeping up with their bills, or just because inflation costs have gone up, and credit has now been extended substantially. Either they went on and got additional credit card debt, or they borrowed short-term loans to stay ahead. So unfortunately, in this world of the internet and more information, people have become very well educated. Unfortunately, not everything on the internet is true, but I give them a lot of credit because you are right. It has become a fear that their desire is to purchase, but they've convinced themselves that they won't qualify because they believe their scores are too low to qualify. So here we try to do our best in communicating through the various means of getting our message out of don't have fears, ask questions. And we feel very strongly on our approach to our business is that people have concerns that they can come to us and ask. And that's why we put ourselves out here today. And one of the things that you and I have discussed and always try to improve our process of when we talk to somebody is how to make them feel comfortable. So yesterday, even recently, we had clients that the first things that came out of their mouth is that they had bad scores and they were worried and they've been trying to do their own thing. And I have empathy for these people because you can see the stress on their face when they have these discussions with us. So today, I just wanted to kind of have this time together to have a discussion to make these people feel more comfortable. So here's the story. Credit score is very important. One of the things that I do ask for permission for is to pull your credit. And a lot of people have fears because they think it's going to decline their scores. People in this world of today, the federal government wants us to pull your credit. It is very important to pull your credit for many reasons. And I can only speak from my experience. So one of the first things that I do when I meet with people and ask questions about a pre-approval is their income, their assets, and I focus on their credit scores because that really drives the process on what they qualify for an interest rate and if they qualify for a program. Now, programs that we discussed in the past is VA, conventional, and FHA. FHA you can have as low as 580, credit score on conventional 620, and VA roughly 580. So, but here's the concern. Nothing is for free. If you have a low credit score, it has an impact on the interest rate you get. Having a higher interest rate because of a lower credit score has an impact on your payment. Impact on your payment is what you can pay every month on your mortgage, including your tax, insurance, and if you have mortgage insurance, has an effect on how much your monthly payment is going to be. So the goal for us when we talk to people is to make sure that they have a handle on their credit scores. Now, we're going to focus on credit repairing and what strategies we personally do, or I personally do, to get a person's score up. I know that if we go on FHA, it'd be better if their scores are in 660, 680 range because it doesn't have an adverse effect on the interest rate. Now, unfortunately, most recently, the two governing bodies that the underwriting standards in our country, Fannie Mae and Freddie Mac, have changed their policy pertaining to what I call risk-based pricing. Risk is a very general term, but in lending, risk is based on what your scores are in this example. So unfortunately, they had raised the ceiling or the flooring, as I say, to get a good rate from 740 to 780. That is a substantial jump. Now, what my goal is, if someone comes to me and I initially pull credit on a conventional loan and their score is at 700, I have a way of analyzing their score to try to raise it to a point where they don't have any adjustments negatively because of their score. So these things are constantly changing, but what's really good about us is that our focus has still stayed the same. Is how do we get our clients in a position to get the best rate at the lowest cost? So getting back to credit repair, and so the goal today was kind of communicate that please do not try to do things on your own. Some people have gone to credit repair companies, which are great choices, but if you make that choice, I would like you to call us first before you make any decisions on your credit scores. Some people try to take on their own, saying, well, I can't afford to buy a house right now because I'm focused on getting my debt down to zero. That is very ambitious and very proud of these people to take that initiative. But sometimes that might be misleading. They can take those monies and use it as a down payment, and there's probably less expensive ways to try to increase their score. So the message that I'm trying to deliver today is what you and I have always discussed. How can we inform our clients that before they make a step of thinking that they're doing best for themselves, there's no cost of reaching out to us, doing a pre-approval, pulling your credit. I incur the cost. It's goodwill. I want to make sure I give you direction. And if your scores are not where they're at, put you on a plan to improve your scores in the future so you can purchase a property. Again, the message I just wanted to deliver today, before you do anything, call us, reach out to us, email us at the Stoic Team. Reach out to me, Peter Georgitsis, at Preferred Rate. My email is peter@preferredrate.com. Again, Peter LoPresti is always available to answer the questions pertaining to properties, but we also want to get you in a position to purchase a property.
Thank you so much, Peter. A very detailed response. Just to kind of go over some points, just to make sure that we reiterate kind of the highlights of the response. So essentially, as long as the clients have a minimum credit score of 580, they already qualify for a mortgage. So obviously, we would work with them to improve their credit score. But of course, if you're already at 580 or above, you already qualify. So there shouldn't be any fears about not qualifying at that range. Additionally, if you're not at 580, as you mentioned and very generously offered to all of our listeners, that you're willing to do a full credit report pull for them at no cost to them. And just to confirm, let's say if they're going to compare you doing the credit pull or let's say one of these credit repair experts, is there anything that the credit repair expert would be able to see that you wouldn't be able to see, or do you have access to the same complete form on their credit?
That's a great question. Now, again, I'm not a credit repair company. I am a lender. And my credit report is very detailed because a mortgage is probably the biggest purchase, in the borrowing that you might do is substantial. So our credit report is very detailed, and the way the system weighs your debts or the history of your credit is very substantial. Now, the point that I want to make, and no disrespect to anybody, is that from my experience, sometimes when people go through the credit repairing companies, they have their procedures and their methods to increase your score that might be a conflict to the way lenders, when they pull your scores, have an effect. So again, no disrespect to anybody, they're doing their best for their clients, and I'm watching out for my client. My goal is to make sure that everything that the client needs to do to purchase a home, when they come to me, I have them in the best position. If they are in the best position when they come to me, that's awesome. If they need a little help, a little guidance to get into a level where that will benefit them, that's what it's all about for us. So, hopefully I've answered your question, Peter. But again, it is a buzzword about credit score, credit, concerns, debt. It's there's no mystery here. People are borrowing more money for, because inflation, for whatever other reasons. But again, we're trying to bring peace of mind to the worries that, they might not qualify or the scores are not in line.
Perfect. Well, thank you so much, Peter. Just to end it, I want to recap with a little story of a client that I had worked with. This client, they actually started off with credit scores in the mid 600s. They would have qualified for any of the mortgages that we offer. And just because they felt a little self-conscious that it wasn't in the 700s or 800s, they went to a credit repair specialist before they went with us. And unfortunately, the credit repair specialist started creating these legal issues for this client, where it took us 8-9 months to be able to finally get their credit back to where it needed to be able to qualify for a mortgage. And the saddest part of this entire process was this client already qualified for the mortgage before they even started the credit repair process. Yeah. And so please just, it's no cost to you. We do the initial meeting. We're able to go over all of your finances. We're able to pull your full and complete credit report and get you a 100% personalized and detailed roadmap to either get you ready to purchase a home or let you know exactly where you are right now if you were to purchase a home.
Yeah, you said it very well.
Perfect. And again, if you to schedule this meeting with us, please go to the stoicteam.com. At the very middle, there's a place for you to go ahead and enter your name, your email address, and then just let us know a little bit about your home buying goals. Additionally, if you already know you want to take that step, Peter G, his mortgage application is at the bottom through a secure portal. You could even go ahead and start uploading your documents, and he'd be able to issue you a pre-approval within 24 hours of uploading your documents to that portal. So again, this is Peter LoPresti, Realtor at Exit Strategy Realty and member of the Stoic Team.
Peter Georgitsis from Preferred Rate, prime member of the Stoic Team.
And thank you for listening.